So this is 2019 A-level paper, accounting equation. So we draw the format for the equation, and the opening balances are given. PPE 4,500, inventory 600, trade receivable 820, prepaid rent is 480, cash 610, trade payables 100, accrued expense 900, advance received 240, equity is 6,580. So we have reported the balances. Now let's record the transactions in the equation. Number 1, depreciation on PPE amounting to 500,000 for the year ending 31st March 2019. So depreciation has not been recorded. The double entry will be PPE will decrease by 500, equity will decrease by 500. This is depreciation. PPE will reduce, equity will reduce. It is an expense. Expenses will decrease the equity. And number 2, the rent of the showroom 80,000. The rent of the showroom is 80,000 for March. Has been included in the prepaid rent account. So prepaid rent account, they have 480. Yeah, prepaid rent 480. Out of this 480, 80,000 belongs to the current financial year. So it has to be taken to the current year expense. Rent expense 80,000. So out of prepayment, we are reducing. So actually the prepaid amount is only 400, not 480. So minus 8,000 from the prepaid rent, and equity will reduce by 80,000. Number 3, electricity bill of 5,000 for March has been neither paid nor accounted for 31st March 2019. So electricity expense, it is an expense. Electricity, it's 5,000. Electricity expense is 5,000. It has not been paid. So we have to take it under accrued expenses. Accrued expenses increase and the equity will decrease. Electricity bill for the month of March. The purchase of goods costing 80,000 on credit 30th March 2019 has not been recorded in the books of account. So it's credit purchases. If we purchase on credit, inventory will increase by 80,000. Inventory will increase by 80,000. Trade payables will also increase by 80,000. Inventory increase, trade payable increase. Credit purchase of inventory. Number 5. The sale of goods costing 200,000 for 400,000 on cash 30th March 2019 has not been recorded in the books of accounts. However, the check received in this respect has been deposited in the bank on 1st of April 2019. So we have to record this sales. The stock cost is 200. So inventory will reduce by 200. And cash will increase by 400. Once you get the cash, you deposit in the bank. It was not recorded. We are recording the entry. Then the profit is 200. Profit is 200. Profit will increase the equity. Profit will increase the equity. Like 200,000 worth of stock sold for 400. Number six. Inventory item costing 40,000 was destroyed during the year and were not in a saleable condition. However, these items have been included in the inventory cost and they did not have a realizable value. So this you can't sell. There is no realizable value. Therefore, we have to deduct 40,000. Inventory will reduce, and this is an expense. Write off. Inventory written off. Inventory written off. $400 is already recorded in the bank account. No, it was not recorded. 400 is, however, the check received in this respect has been deposited in the bank on 1st of April. It was deposited in the bank 1st of April. Right? But not been recorded in the books of account. It was not accounted. That is why we have recorded in the inventory, in the cash account in the book. Yeah, it's a stock loss. Write-off means this is stock loss. You can say stock loss or write-off. It's not an issue. What is realizable value? Realizable value means selling price. Expected selling price. Expected selling price. Realizable value. We have that in LKS2 under inventory. Net realizable value. Right? Number 7. Customer has placed an order to purchase 40 items. The selling price of these goods was 240,000 and this amount has been received during the year. This amount has been recorded in the advance received account. So total amount has been recorded in the advance received account. However, only half of these goods has been delivered to the customer by 31st March 2019 and their cost is 80,000. Further, no entry has been made with respect of this delivery. The rest of the goods should be delivered during the year. So this is a part of the standard revenue recognition. And when do you recognize the revenue? When the major part of the business has been completed, then only you recognize as an income, as a revenue recognition. And so only 80,000 worth of goods have been sold, have been delivered. So the income related to or the revenue related to 80,000 should be recognized as the income. The remaining 50% should be recognized as an advance. It's a pay receipt, right? So here you can see advance received is 240. So 240 received for the total goods, that's the total sales price, and only 80,000 worth of goods were sold. So stock will reduce by 80. What is the selling price of this 80? Selling price of this 80. That is 50% of the advance. 50% of the advance is 120. And the profit of this is 40. 120 and profit is 40. So from the advance received, we deduct 120. Right now it is not an advance, it's a receipt. Right? With 80,000 worth of stock sold for 120, you are getting a profit of 40. So that we have to record under the equity column. Any doubts? Let me explain that again. There is an advance received of 240. Advance. This is for the selling price. And only 50% of this is delivered. The cost of delivered good is 80. So what is the selling price? Selling price, we have to take 50% of the selling price. So 50% of the selling price is 120. Another 120 still we have not delivered. The cost of that is 80. So then only total becomes 240. Total cost becomes 160. So only this amount will be recognized as the income in the financial statements. That is why we put 120 and 40, and the profit is 40. Is it clear now? %50 is recognized, another 50% is advance. Right. So let's move to the next one. Bank statement received on 3rd April revealed that a check for 20,000 received from a debtor on 28th March has been dishonored by the bank on 31st March 2019. So it's a dishonored check. Dishonored check. So what's the entry for dishonored check? 20,000. Trade receivables will reduce, increase by 20. The cash for the bank balance will reduce by 20. When you receive the check, you reduce the debtors and increase the bank. Now it's returned. Bank balance will reduce and the trade receivable balance will increase because their check has been returned. Right, so there was one more question. Let me check. So should we consider as income only after exchanging the goods? Yeah, I'll show the working. Yeah, revenue is recognized only when the major part of the business is completed. Major part of the business is completed, then only you recognize the revenue. A customer comes and pay us the advance. Right, so we have not delivered the goods. Once you deliver the goods only, you have to recognize that as a income. So that's the recognition part. Only when you transfer the goods or deliver the goods, you recognize the income. We will learn that in the revenue recognition standard. Recognition. Right. Next transaction. Transaction number 9. There is a question, sir. Bank statement received on 3rd of April. Even though the bank statement received on 3rd April, this has been dishonored by the bank on 30th March. The transaction occurred on 31st March. Therefore, you have to recognize the transaction in the financial statements of March. Okay? Because it's specially mentioned. Dishonored on 31st March. Even though the bank statement received later. Sometimes we don't receive the bank statement after 2-3 days. Sometimes I have received some bank statement after 15 days. Right? So receiving the statement is different. Occurrence of the transaction is different. Right? Because of the COVID situation, I received some of the bank statement after 1 right, from some business accounts. So receiving the statement is different. Occurrence of the transaction is different. Right? So that is why we say the transactions will occur, not when the statement received or not when the cash payment is done. We learn the accrual concept. Transaction number 9. Bank statement also revealed that 50,000 has been deposited by debtor directly in the bank 31st March 2000 31st March 2019. This amount has been written off as a recoverable amount when preparing the draft financial statements. So 50,000 received from the debtor who was already written off as a bad debt. So what's the double entry for bad debt? Bad debt account debit, debtors account credit. You deduct from the debtors and consider that amount as an expense. Right now, the expense which we have made, we are getting from the debtor. So it's like a bonus, it's like an income. So the double entry for this, or the entries for this is, we get cash, cash will increase by 50,000, cash will increase by 50,000, and this will increase the equity by 50,000. So no need to adjust the uh, debtors account again. No need to adjust the debtors account again. You can consider this as a income. So income statement is credit, income account credit, and cash account or the bank account debit. Then number 10. Transaction number 10 is written off and bad debt the same. Yes. Debtors written off, bad debt both same under debtors. Right? Stock written off is different. Here bad debt. Bad debt written off or this debtors written off is same. Last transaction, the bank statement revealed 2,000 paid by the business as examination fee of the owner's child. So what is this? Owner's child, payment to owner's child. It is not a business expense. It's drawings. So amount is 2,000. We have to deduct 2,000 cash and the equity will be reduced by 2,000. So those are the 10 transactions. Right. On the second question, any doubts? Any further doubts? This was perfect. Any doubts up to now? So then let's find the ninth one. Yes, ninth one. The bank statement revealed that a check of 50,000 has been deposited by a debtor directly in the bank. This amount has been written off as an irrecoverable amount when preparing the draft financial statement. That means there was a debtor with a balance of 50,000. Okay. When preparing the draft financial statement, this 50,000 was taken as a bad debt. What's the double entry for bad debt? Debtors account credit, income statement debit. It's an expense. This is expense. It is an expense. Now what happens? We are getting cash. What's the double entry for cash? Cash receipt. Cash account debit 50. This is our double entry. Income statement credit 50. So income statement will set off. If you see the final balance, there is no debtor, he has paid money. And this is our entry. This entry is done. They have done it. That is why they are saying it was done in the draft financial statement. We are doing the second entry. Cash increase, income increase. It's an income. Okay. Right. Income statement, yeah, you can say bad debt account. End of the day, it goes to the income statement. This is bad debt account. You can say bad debt account. That is fine. This income statement means this is bad debt account. Bad debt account balance goes to income statement. Okay. Right. So next, the question is a statement to show the correct draft profit for the year ending 31st March 2019. So correct draft profit. Now, in the question, they have given the profit for the year is 580. Profit for the year is 580. So that is the draft profit. 580. 580 is the draft profit. Out of this, so it's before adjusting all these transactions. So once you adjust the transactions, once you adjust all these transactions, the profit will change. The profit will change. So what are the transactions which affects the profit? From this. So let's identify the transactions which is affecting the profit. Right. So let's see. Depreciation, rent expense, electricity, stock loss. These four transactions are losses or expenses minus, and the other transactions is 200 profit, 40 profit, is bad debt recovery. So these three will increase the profit, right? So let's record them. For the draft profit, we will add the profit on sales 200. Again, there is a profit of 40. profit of 40, and bad debt recovery 50. So total increase in the profit is 290. Deduct depreciation, all the minuses will be deducted. 500, rent expense 80, rent expense is 80, electricity 5,000, stock loss is 40. Stock loss is 40. We don't take drawings. So total 625. Therefore, corrected net profit is 245. Drawings we don't take. Drawings does not affect the profits. Drawings will not affect the profits. What will affect the profit? Only income or expenses. Only the income or expenses will affect the profit, not the drawings. So, drawings we don't consider. Uh, drawings doesn't affect the profits. Double entry for drawings: cash account decrease, cash credit. Drawings account debit. We have to show the drawings after the profit separately in the statement of financial position. So can't we add the net changes of the transactions with the draft profit? Yes, we can do that. Net change is this. Net change is 335. So that change you can add to the draft profit. So you get 245. That is also possible. There's one more question I think I missed. Can you explain the last transaction once again? Last transaction is bank statement revealed. Once you get the bank statement, you got to know that there is a check payment gone for owner's child examination fee. So that you have to record as a drawings. Bank account decrease. So here we have deducted from the bank account cash minus and equity minus. That's last transaction. Right. Now we have the third one. Then they ask journal entries required to rectify or record the above item numbers 2, 3, 4, 9 and 10, including the narration. So if you don't write the narration, they have reduced 2 marks out of the total marks. So let's see what are the transactions 2, 3, 4, 9 and 10. So let's write the narrations or double entries. Transaction number 2, prepaid rent and equity. The rent of showroom 80,000 for March has been included in the prepaid rent account. So we have to credit the prepaid rent account and rent expense account. Expense account debit. $80,000. Prepaid rent account is credit 80,000. So you can say correction of recognizing the rent expense for March 19. Recognizing the rent expense for the month of March. Is any error when transferring to the trial balance, then do we include it in the profit adjustment statement? Yes, we need to adjust it in the profit adjustment statement because trial balance is financial statements are prepared from the trial balance. Yeah, showroom, you can say showroom rent account, that is fine. Showroom rent or rent expense, no problem, that is fine. Showroom rent expense account debit, prepaid rent account credit. The transaction number 3, electricity bill 5,000 for the March has been neither paid or not accounted. Right? So double entry, electricity expense account debit, electricity expense account debit 5,000 and it will be credited to electricity payable, it's liability. Recording the omitted electricity. Recording the omitted electricity. Right, so that's the second transaction. The transaction number 4, the purchase of goods costing 80,000 on credit on 30th March has not been recorded in the books of accounts. Right. So transaction number 4, it's a credit purchase. Purchases account debit, purchases account debit, creditors account credit. Purchase account debit, creditors account credit, 80,000. 80,000. Recording omitted purchases. Recording the omitted purchases. Right? Then transaction number 9, recovery of bad debt. Income statement or bad debt account debit. Bad debt or income statement. Sorry. Income statement credit. Bank account debit. Bank account debit. Bad debt or income statement credit. It's recovery of bad debt. Transaction number 9. You can say cash control account. Cash control account or bank account, that's fine. Bank account, cash control account. Don't forget, write the narration because I have seen most of the students, they are not writing the narration. So in the examiner, in the Marking scheme, specially they say give 2 marks for the uh, narrations. Last one, number 10. That's number 10. Land statement reveal 2000 paid by the business as examination fee owner's type. So that is owner's drawings, drawings account debit, drawings account debit, bank account, the cash control account with 2000. According to owner's drawings, drawings according to the owner's drawings. So these are the journal entries for the transactions.